Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To begin with, today is the Reserve Bank's first rate decision for 2018. With many market participants eagerly awaiting to the release of the decision and more importantly to the statement, because the market is looking for further clues to how the RBI is actually thinking. If the central bank is thinking more along the lines of the hawkish in terms of looking to raise rates, then we could see a possible retracement in the Australian dollar in the next short term. So the support at the moment is at 78.65 and I am looking for a retracement from 79.35. What also supports my view for a slight retracement is the fact that the market could actually rebound from current levels and look up towards from 65 up to 79.35. The euro still looks to a bear case, and with the shooting star recently come out not so long ago, could it get further confirmation if we see a break of 123.50. Therefore, this would actually open way and expose the region of 122.65.75, which is the preferred view that I have. Now, overnight, we did get the US ISM non-manufacturing number. It was a surprise. It was more upbeat at 59.9. And also, along with the Friday's payrolls for 2,000k jobs added in January, beating expectations of 181k, does support that the Fed may be actually looking to hike rates not only at March, but maybe even quicker, because the economy and growth is still looking very well and still maintains to an upbeat outlook. Resistance on the day comes in at 24.35. For some of us, dollar yen didn't come through to the upside and actually has given us opportunity to look to buy. I believe the market will hold above 108.65.75 and look up towards 109.65 and maybe beyond to 110.50.65, where I look to square up my long positions. If we do fall underneath 108.65, then I would stop out and reassess. The pound reaches its target at 139.90 overnight and still holds to bearish implications given from the MACD as well as the rest of the indicators. Therefore, I am looking down towards 138.50 as a potential target and reassess from there, with the immediate support coming in at 139.40 as minor. Resistance on the day is at 140.20. Well, the gold outlook still looks relatively negative, but that being said, I'm not overly bearish when it comes to 1,320 to 24 region. I expect to see a market rebound from there and eventually look up towards a broader target of 1,400. In the meantime, though, resistance looks at 41 to 46 and immediate support is at 34. And to round off with oil and silver, the market for oil slips away lower and now closer to $62.60 and further from that $66 handle. With the technical implications still bearish, I will maintain that view until we get to that level of 62.60 and reassess from there. And rounding off with silver, well, the market did respect 60, and from the recovery could see further scope up towards the $16.90 region. I'm not a bear at these levels, and we might find that because silver overshot itself to the downside, a little bit more recovery coming through. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.